Well, I guess I figured out how to go to live. Possibly. This shit is hilarious. All right, let me see. Let's try to share the screen. No idea what the fuck I'm doing. Let's see if I can figure out how to see if there's any chat. This has got to be embarrassing. Trying out Riverside for the first time. And cannot figure out for the life of me how to get to chat. Oh, there's a chat button. Live stream chat. I feel sorry for the whatever it is, the 29 people in here. 27. Well, I bumfuggled this. Let's see. All right, so live stream chat. Okay, that's just chatting and Riverside, I think. Whiskey Tango Foxtrot over. Oh, okay. How come I couldn't see that chat before? Let's share my screen. Okay, I think I might be cooking with gas. I don't know, with this whole fucking right side of the screen, I couldn't see shit earlier. All right, so I think I got that somewhat figured out, even though the video is lagging like shit on that screen. Okay, there we go. All right. Well, it only took 5 straight frickin' minutes of bumfuggle to figure some shit out. Anybody want to talk about anything? My plan is to maybe do some of these when the market opens, and just live trade, take questions, etc. But Riverside's being a little bit of a pain in the ass. I used their little background, but for some reason it would only let me use video effects if I was on my second monitor instead of my primary laptop screen. So I don't know what the deal is with that. But I wasn't even sure if I was gonna go live. I was like, let me see if I can figure out how to connect this crap. And didn't exactly accidentally go live, but kind of. I should be taking a shower right now instead of doing this. But I couldn't help but just click go live just to see if the shit would work. And apparently it is. Going good, going good. I'm glad I'm on the free trial right now. I don't know if I'll be using Riverside for sure or not, or something else, but is the audio okay? Somebody give me a signal. I should probably say, like, hey, it's so late. This is episode 265 or some shit, but all right, cool. All right, well, maybe this will be a preview of big things to come, but for now, I joined this shit with absolutely no frickin' plan whatsoever. So, let me just take a peek at. Okay, why do I have echo now? All right, that's brutal. All right, for some reason, oh God, I have crazy echo in my frickin' AirPods right now. All right, let me see if I disabled stupid ass audio from desktop. All right, cool. I'm glad there's no thumbs down buttons on this shit. Okay, so DL777 want to buy long calls on MicroStrategy, never have before. Any advice? Uh, my lawyers are steadily telling me right now I have to say not financial advice. However, I will tell you how I decide what options I want to buy, and I'll tell you what the trade-offs are, and then you can decide for yourself. So there are two ways to buy long options from my perspective, and I'm a native option seller. So when I started trading in 2020, it was all from an option seller's perspective. So for me, when I'm selling options, I want to go out here anything under 45 days to expiration. Tasty Trades research says that that's the optimal time to collect an accelerating theta decay. So I'll go out here anything under, weeklies up to 45, 50 days to expiration. And I'm selling anything above, anything out of the money. You can be as greedy as you want with the premium. You can be as safe as you want with the call away value. Balancing that trade off. So if those are the options that I'm trying to sell, then it makes sense that I don't want to buy those options if the option sellers are licking their lips. So the safest options to buy, I would probably have to say, are leaps. And of course, they get a little bit more expensive. And there's two types of leaps that I want to purchase. One would be either completely speculative. So I have purchased some of I think it was 380 strikes when I got into them, but now they have the 460 strikes. So I am either going to purchase as the cheapest I can out of the money. And the reason is because as opposed to shares, I'm able to buy more delta per dollar. So if I'm just buying these hoping the price goes up, these are the ones that I'm looking for. However, if I actually want to do something with them, like set up a poor man's covered call, then I'm probably going down to something in the money because I need at least like a 0.7 delta. 0.8 is a little safer. 0.9 is like way safer. And that's like safer in air quotes because there's nothing safe in the stock market. These are quite a bit more expensive. But if I want to use this as my collateral to sell covered calls against, then I would buy the deep in the money ones. The trade-offs here, obviously, besides price, but you're not going to be able to buy as much delta for the same dollar amount. However, the advantage to the in the money options is that theta is much smaller. So this is 0.0867. So let's go all the way back to the top again. 0.11. So for this one, 11 cents is draining out every day, and then the other one, 8 cents. So you're going to be able to hold an in the money option longer without it decaying. So that's how I decide which options I'm going to buy. However, like these shorter date ones, I am probably going to do something a little against my, I don't want to say it's against my better judgment, but it's against what I've instinctively want to do as an option seller. And I'm probably going to grab some of these. I grabbed 5 already, but just kind of wanting to jump into the January expiration excitement. There's going to be a bunch of in the money option buyers that may be exercising. Not saying that there'll be a squeeze in January, but you can always hope. So did grab like 5 of these, but for the most part, it's leaps. Long-term expiration anticipatory securities. So let me know if that answered your question and if you got anything else. What's up, Junkrat? Wonder how much delay is actually on here, because when I talk and I'm looking at my face, it looks like I'm on a fucking sat phone to somebody overseas. When does seller exercise? Yeah, I'm having a hard time trying to figure that out myself. I've got some of the Decembers, and I'm hoping to let those ride for as much of 2025 as I can, just in case the bull cycle continues. And in this case, as I mentioned, since I try to sell anything under like 45 days, once my long calls get to 90 days, I start getting nervous. And I'm like, I just want to sell them. I don't want theta to start accelerating, and I don't want the value of my option to collapse. However, this is optionsprofitcalculator.com. Pretty nice little resource for deciding. Okay, you did mention specifically April 2025 190s. All right, so those today would cost about 8,000 a pop. And let's go up to, let's be optimistic, and let's just say, what if they're anywhere approaching, up to $1,000 at something like 500 a share. if I'm looking at these 3 months early, I'm looking at these in January. Bottom for 8, and they're worth, let me see, do I need to move this down? There we go. And they're worth like $30,000, $24,000 profit. And then if you hold it all the way to expiration and the price stays the same, it's going to lose about $3,000 worth of value. 10%, it's probably not a big deal. Something that's this in the money, it probably doesn't matter whether to just sell them outright. But if you want to maximize and you're like, okay, I just want to keep the $3,000, the advantage to exercising though is, from what I understand, and I'm not a financial advisor, I'm sure as hell not a tax advisor, but from what I understand, exercising doesn't create a taxable event because now that's your new cost basis. So you're actually buying in at 190 a share and you haven't sold. So I think your cost basis is 190 plus whatever you paid. So you'd paid 82. So your cost basis would be like 272, I believe. And then if you hold those for a year and sold them, then you'd have to pay short term. And if you sold them for under a year, within under a year, then you probably have to pay the long term. So yeah, I go here and just, but like, let's say it's cutting it close. So if you've got the 190s, that means your break even is going to be that plus 82, right? Yeah, so if the price doesn't go over 250, these are losers. So in January, if the price is 280, you can sell these for like $2,000. And then if you hold on to them and the price doesn't go anywhere, now it's going to lose like 60% of its value. So on April's, if we're cutting it close to your break even, and I don't know what your entry price was. If your entry price was much cheaper, then you've got more wiggle room. But in January, February, like if I'm looking at a tiny little profit, I'd probably just cut bait and then either, roll out to a later date if I still think the price is going to go up. But leaving these on with 60 to 90 days left with just barely a little bit of profit could, if the price just goes sideways on you, then you end up losing a bunch of money here. You'd need the price to rocket up from 280 to like 400 to make it worth holding. So if you think that the price still has a nice pump left in it, no big deal. But certainly if we're at like 5, 6, 7, 8, 9, it kind of just doesn't matter, because the option isn't going to decay from January to February if it's this just amazingly in the money. All right, Robert Johnson, maybe missed, but is there a good site software to show all the Greeks and compare when shopping? So I started trading on Robinhood, and people clown on Robinhood because it's where all the new options investors go to lose money, like all the degens. But like the traditional platforms are kind of busy, to be honest. The user interfaces kind of suck ass, and I'm used to the numbers being upside down, but somebody needs to go back 30 years and slap the shit out of options traders for building the freaking options chains upside down and having like the low numbers up and the high numbers down. It doesn't make any damn sense. So Robinhood's user interface is actually not bad. I mean, it's got all the deltas that you really need. It's got, excuse me, all the Greeks that you really need. The deltas here. Gamma is how much your delta is going to change for $1 in movement. It's got theta. Vega is related to your implied volatility. I don't even use this to trade, but I mean it's an important Greek to know. And I don't even remember what the hell rho is for. It's never affected my trades at all. However, I've learned so much from Tasty Trades videos throughout the years that even though I pay like, is it $1 a contract or something? I moved most of my trading over here. Like for an option seller specifically, IV rank is very important. Anything over 50 is like decent for option selling, and the reason is because implied volatility is generally a mean reverting statistic. So this was the MicroStrategy pump back in March, and implied volatility just rocketed up from MSTR's baseline, and then we got like a 2x, and then it ended up going from like pre-split, it was like 500 a share to $2,000 a share. And then over time, the implied volatility just kind of just collapses a little bit gradually. And so right here, if I'm selling volatility, then as a month or two goes by, if I'm selling the 45 days to expirations, then I'm profiting as MicroStrategy did peak at 2,000, but then it also implied volatility is collapsing, which makes the options prices cheaper. So if I'm selling it for 1,000, that just makes it quicker for me to be able to buy it back for 500. So Tasty Trade's got a lot more customizable stuff. Like I can customize the columns, and do I want to see there's a column for delta, the mid price, like out of the money percent. So if I'm selling a long call, the delta or the out of money percent should kind of give you a decent estimate for how often you should expect for your shares to get called away. So, right here, selling covered calls at 245, you should fully expect 36-ish, 30% of the time, your strikes are going to be breached, they're going to be threatened, and it should not surprise you if someone exercises and calls your shares away. So if you are the least bit squeamish about losing shares, then this is not the way to go. Hell yeah, Robert. Thanks for the question. Better than watching the rally. Yeah, Robinhood's interface, Crypto Chef. I can't complain really. See, Junkrat, if you're not selling covered calls on MicroStrategy due to the bull, do you have another go-to or just stick with the devil? Yeah. So MicroStrategy kicked me in the balls pretty hard back here. So I was selling, let's say, the pre-split numbers. I didn't get wrecked from 500 to 1,000 really, but when the price was about 1,000, 1,200-ish, I sold some 1,400 strikes, and then the price went to 1,700 in a week, and so I ended up paying about, I had 3 covered calls. I think I paid 30 grand to roll one of them. I ended up letting one of my 100 shares get called away. And actually, I think I paid to roll 2 of them because I still have 2,000 shares. So pre-split, that would be 200. Yeah, I think I had 300 shares. I let 100 get called away. And then I think I paid like 25, 30 grand to roll the other 2. So that is why I only have 5 covered calls on right now for 2,200 shares. So that's only about 25% of my shares are covered. And then in addition to that, I've got 20 leaps, and that's worth about 1,000 delta as well. So that would be like another 1,000 shares uncovered. So MSTR has really put the fear of God into me as far as being afraid of missing out on unlimited upside. And just these last couple of covered calls, I only put on because MSTR was hitting all-time highs. You know, we had all-time highs of 200, and then, you know, 220 is 10% over all-time highs, and then I added another covered call. And then at 240, that's 20% over all-time highs, so I added one more. So just kind of like tiptoeing into it. However, in my 5K account, I decided to try to like make sure that I actually remembered how to sell options when I don't have a larger account. And so back in March, I took all the money out of my Robinhood account except for $5,000. And I figured, let me just try to turn it into 25 grand. And I figured I could probably do it in 5 years, just earning like, you know, 0.5%, 1% a week, chipping away and just gathering little bits of premium, selling the mining stocks. Can't really afford MicroStrategy straight up. But, you know, just bought CLSK, well, sold puts. Sold puts in CLSK and Riot. I was doing Mara for a while, but they started mining Caspa, so I had to tell them to go fuck themselves. And used to sell... What was the other one? I dabbled with Iron. I don't know if they have pennies now, but any options that don't trade in increments of pennies that are like small stocks kind of tick me off because you're going to get screwed getting in and out of the trade. So yeah. So for Iron, like I don't really even do due diligence on the companies. I maybe irresponsible, but I don't really have time to dig into them. I mostly just care if the premium is worth a shit. But they're Bitcoin derivatives, so I already believe in Bitcoin. So that's kind of like, I guess that's my verify. That's my don't trust verify portion is just, okay, they're mining stocks. But the fact that the bid-ask spreads are in increments of nickels, that means I kind of actually have to pay like an extra $2 or $3 to get into the trade, an extra $2 or $3 to get out of the trade. So I don't have anything against Iron as a company, but especially when you're dealing with small stakes, like I'm only going to collect $20 on this, and to lose $3 to the bid-ask spread, that's already like 1.5% getting in the trade, another 1.5% getting out of the trade. It's just a pain in the ass. And yeah, so if I wasn't an orange pilled Bitcoin maxi, I would just go and like, I'm not going to trade Apple because the premiums suck ass. Like Apple's probably going to go up, but $10 of call away value and I can't even get like 0.5% for the week. That doesn't interest me. I know some of the other TradFi option sellers that I follow. What do they like? I think they like Palantir. I used to trade the shit out of Palantir. Let's see, $45 a share. Selling out the money puts can get 87. So 1% would be 44. So that's about 2% for the week. That's not bad. And then if you own the shares, trying to collect 1% premium for the week, you could sell the 4650s. That's not that great. $2. Well, that's just a couple of percent call away value. Yeah, Palantir doesn't really excite me that much either. Let me see what I can do at 40 days to expiration. So 40 days to expiration. If I want to collect 1% a week, I generally manage these every 2 weeks, so I want to multiply the premium or divide the premium that I'm collecting by 4 to find out how much I should kind of reasonably expect to collect per week. So 1% of 44 is 0.44, so 4 times that would be what, 160, 184. So selling the 51 at 40 days to expiration gives me $7 of call away value. It's not terrible. Yeah, when I first started out, I just traded anything. I would just go to Market Chameleon and go to their implied volatility charts, and where's all right, I'm already signed in. Options, implied volatility rankings. This is what I used to do. Every single day I'd log on, and then I'd filter for whoever has the most, the highest implied volatility, and just trade all of this ridiculously risky horseshit in here. Like Spirit Airlines, complete garbage of a company. Usually people say when you trade options, you want to sell cash secured puts in something you don't mind owning. So like most of this is just hot garbage. But at one point when Tesla was real volatile, it was up here. It was one of the top ones. But this just took way too much time. I mean, I'd have to go, put in this ticker's name, find out if they have weekly options, and then, Google the company to make sure they're not going out of business. This was just a giant ass waste of time. So now that I'm fully orange pilled, I just trade, I just trade MSTR, I trade mining stocks, and once the Bitcoin ETFs, which one is it IBIT? Can't remember which one is BlackRock's. Is BlackRock? Doesn't matter. But once options is here, then I'll see if the premiums are worth a damn. I would consider that. As soon as SMLR gets options, I will definitely take a look and see if that's worth trading. Let's see. All right, Junk Rekt. So if you're not selling covered calls, do you have another go-to? Yeah, that's my other go-tos. Is just the miners on my small account. I'm trading the miners, and if SMLR gets options, I will definitely take a big look at that. And yeah, the Bitcoin ETF options will be interesting. Crypto Chef, have I started selling covered calls on MSTU or MSTX? No. And I haven't done a deep dive on them, but the one warning that I saw when I was watching, I can't remember who was getting interviewed, but they said something along the lines of these leveraged plays get like rebalanced like daily. So you can actually, the price of MicroStrategy can, this is the way they explained it, and it sounded plausible. But if the price of MicroStrategy goes up $5 and you make some 1.75x leverage profits, but then you don't sell before the end of the day, and then the price goes back down $5 tomorrow, because of like getting in and out of the trades, or for some reason, even though you'd think you should just be back where you started, these leveraged tickers will actually lose money. So you can go up $5, down $5, but still be down somehow. And I haven't figured out if that's true or not, but it sounded reasonable. Plus, they're going to have management fees, so screw management fee. To me, that just automatically means it's going to underperform. Any degen options like grain with MSTX? No, I don't have any of those. And I did get I did kind of get excited when I saw that leverage, but then honestly, I can just buy as much leverage as I want. Like, why do I need someone else to manage my leverage? Because if I don't want leverage, I can just buy the shares, you know, however many shares I want. One share is one delta. So if I want 100 delta, I can just buy 100 shares. There's no leverage there. However, if I want leverage and I go out to, I said I got 20 of the Decembers, but 100 delta is going to cost me $23,200, right? Well, 0.44 delta, and options is everything's times 100. So for 44 delta, I can get that for what, 25% of the price? So two of these would give me the 88 delta. So like what, 2.25 of this price? So for 9,000, what, like 11, 12 grand, I can get 100 delta. I can control 100 delta for half the price. That's the bottom line. So I can just customize as much leverage as I want. And that basically, that kind of works out to 2x leverage, right? Paying full price for the shares is going to cost me 23 grand. Well, getting 100 delta worth of options is going to cost me half that. So I can get twice as much delta for the same price if I want 2x leverage. So I don't see, it doesn't benefit me to pay somebody a management fee to do something that I can do for myself. Hey, I appreciate it. It's giving me something to talk about. All right. Any other questions? Maybe I'll screw around with spaces next. So, my ideas. Let me look and see. I send myself emails with ideas. So, my latest idea really is kind of around Bitcoin. So, there's a YouTube strength channel that I follow called Starting Strength. And oh shit, I just lost there we go. And the guy's name is Mark Ripito. I bought his book, but I've only read the first line in the first chapter. But the line, it goes like this: physical strength is the most important thing in life. And it sounds dumb because it's like, no, family's more important. But if you ask any 85-year-old guy in the nursing home who can't get himself to the frickin' bathroom, what's the most important thing in life? And he might just happen to tell you physical strength is. And so it made me think about Bitcoin, because the most important thing as far as digital money is concerned is going to be network strength. And as long as, Jeff Booth likes to say, as long as Bitcoin stays decentralized and secure, then it has almost no chance of failing. And I don't know if that's worth a whole ass Orange Pill Investor episode, but that's something that hit me today while I was kind of walking the dogs. What's my short-term plan? My short-term plan over 2025 is to get as much leveraged long exposure as I can stand and still be able to sleep at night. So as an option seller, I didn't have any of these leaps and none of these long calls. And I was just happy to just go along selling, 1% a week, 2% a week, 4 or 5% on a 45-day, collect half over, 2-3 weeks. And then when I saw Quant Bros 1 and I saw Adrian Morris's X article on the reflexive flywheel, and how the S&P 500 companies are just basically just gaming the system. And once they gain entry, they just do stock buybacks and pump up their share price. And once they get in, they just stay there. But MicroStrategy is going to completely wreck that entire model. So once I kind of accepted that MSTRs, the catalysts for MSTR were pretty likely, and nobody was really figuring it out, even though the market is constantly front running everyone. I wanted to just go as long as possible. So my plan is to strategically sell some covered calls when Ivy rank is up, when implied volatility hits, these levels. The next time that MSTR pumps from, what is it, 220, 30 right now, when it goes to like 400 in a couple of weeks, and implied volatility is just ripping, I will probably sell some covered calls on those levels. And then at some point in 2025, I've got like 6 figures of margin debt here, and I borrowed a bunch of money, like signature loans and shit, to plow into MicroStrategy as well. So none of that is particularly, well, the signature loans really isn't a bad idea. Michael Saylor even talked about being a Bitcoin triple maxi, like just go and get debt that's not mark to market on the price of Bitcoin. And I guess I've been kind of doing that with the MSTR. But trading with margin on MSTR is pretty dangerous. So that's probably not very smart. So for sure in 2025, as MSTR pumps, I will be taking profits until I have no margin debt. I won't be trading on any margin in 2025. So I'll be selling covered calls and paying that down. I will, let some shares get called away if necessary to pare that down. And then for sure around September, October, I will be looking at these leaps, since they're going to be around 90 days to expiration, and I will either just be selling them for profit, or if they're deep as hell in the money, maybe I will sell covered calls against those as well, forming poor man's covered calls, and then kind of figuring out what they're worth. And do I have to sell 2 to exercise, to be able to afford to exercise 1? Or, sell 1, exercise 1, whatever it is, however much profit is built in here. I will try to accumulate as many shares as possible, unless I'm just still overweight on shares. Like if none of these 2,000 shares get called away, maybe I don't want to exercise any of these. And if the market gods are smiling on me, then Tesla will not have ripped, at that point. Like maybe they won't have been ramping their FSD frickin' robotaxi army yet. And I will probably plow a shitload of profits into Tesla and then hope that they run to 2,500 a share, before 2027. And then if the bull bear cycle continues and Bitcoin goes into the toilet in 2027, then I will sell off my Tesla and rinse and repeat, and just kind of go back and forth. So short-term plan is up to a year. I'll be taking profits and eliminating all my margin loan debt, and hopefully have as many shares as possible. Hopefully have more than I started with. I think 2,500, maybe 3,000 shares is reasonable. If I exercise a third of these 20 calls, that would give me an extra 600, 700 shares. Oh, and so there's a really good investment, I guess, kind of guru, Chris Cole, and he came out with, this is before Bitcoin, I believe. It's called the Dragon Portfolio, and it was like 40% gold, and he had 5 different things in it. And some of them were long volatility, some of them were, I think, short. There was assets in there, but it was like 30-40% gold. And I'd like to try to make a Bitcoin version of that. And just because, well, if MicroStrategy gets big enough, then I'll probably just be able to sell covered calls against it and just live off of that, and I won't care. Like if MicroStrategy's $1,000 a share in 2025, and then it collapses to 500 in 2027, and I've still got 2,000 shares of it, like it'll suck to watch my portfolio get cut in half. But at the same time, my covered call profits will be so much that I just won't care, because I'll still be able to pay the mortgage and the, buy groceries with that money, with plenty to spare. So I am looking at ways, though, of trying to preserve that portfolio. Like I don't want to necessarily buy puts in MicroStrategy, but I would consider buying some puts, protective puts, in a correlated asset that isn't MicroStrategy. So that would be like the Bitcoin mining stocks, the Bitcoin ETFs, or if, and this is my first choice, if the Ethereum ETFs get options, if Ethereum is pumped in 2025, and the Ethereum ETFs are pumped, and they enable options, I would probably be loading up on puts, just buying puts. And when Bitcoin crashes in 2027, if it does, my assumption would be that Ethereum will go straight into the toilet. So those puts might print. But yeah, I think one of my main fears is I don't want to give, if I do hit it big on MicroStrategy over the next year, I don't want to give it all back to the casino. So I'm really trying to figure out the best way to buy insurance against my portfolio's value while I ride out the bear market of 2027 if it comes. All right, my chat is either frozen or because I minimized it or something, like half of it disappeared. So the last thing I saw was the comment from, oh, okay. Yeah, I definitely lost a bunch of the chat. Let me see if it'll let me scroll back up. Yeah, I don't know what the hell I did, but now I only have 3 comments in the chat. It's Robert Johnson. I'd love to rotate into Tesla, and Vegas Hodl. Yo, I'm buying Misty and MicroStrategy Leaps. Yeah, Misty should print like, I don't know how often I have to repeat not financial advice, but I did a video on Misty, and if I was a dividend investor, like that's the only thing I would probably own. But I just don't like management fees, and I think just for that reason alone, it'll underperform MicroStrategy. But any bullish strategy should benefit with MSTR in a portfolio. Yeah, Junkrat, I don't know what happened. I refreshed, so now I have like 4 comments. I can see whoever just commented in like the last couple of minutes, I can see that. But I lost everything before that, annoyingly. So if anybody asked questions, just ask it again. It should hit the chat. And I'll probably do another 10 minutes or whatever. Note to self, don't minimize the fucking chat window, because they disappeared. Oh man, I can pop out the chat. Maybe that'll do it. Is that gonna be better? No, it's still just giving me. It's still just giving me the last like 6 comments. That's weak. Ben +1, gotta fill the chat back. I appreciate that. Yeah, next time I didn't even know if this was gonna work. The first time I tried to restream like a few months ago, I tried to use something and it was making me put in like my API key and all this and that. And I tried to go live and it was just a black screen and I was like, all right, this, streaming sucks. So I gave up. But yeah, I'll definitely give you guys a heads up. And I got a little idea uh cooking for you, Ben, too, if you're down. But you can come on here and explain to everybody how the convertible bonds work, and then convince me that it's not me selling covered calls. But so that might be a little bit of fun if you want to do it. Not to put you on the spot. All right, what other questions people got? Otherwise, I'll probably cut this in the next 5 or 10. Hell yeah. Yeah, so MicroStrategy basically turned me against my better judgment. Like, I started selling covered calls and basically running the wheel, sell cash secured puts until assigned, and then, then just sell covered calls against it. And it's hilarious to me when people say, "Oh, but what if the price goes down and now you might have to sell covered calls below your cost basis?" And I'm like, "Oh yeah, because the price of the stock can't go down using other strategies. Like, give me a break. If you don't know that when you buy stock, the frickin' price can go down, like I don't know what else to tell you." So yes, like I don't know. I think some people want somebody to just explain to them the perfect strategy that can never lose money, and it's like that doesn't exist. However, if you suck at picking stocks, instead of just getting into any stock like this one at 230, if I sell a cash secured put at 230 for next week and the price goes below 230, well, at least I got paid $900 for it. Like, now my cost basis is 221. Having a cost basis of 221 is better to me than having a cost basis of 230. So if the price goes down to 175 and my cost basis is 221, I'm happier than if I paid the full price of 230. But people will say, "Oh, well, now you got a bag hold because now you can't, you know, if my cost basis was 275 and I'm trying to sell covered calls for next week, like, yeah, there's barely anything here. I get it. But, you can always roll out. If I had a 275 cost basis in MicroStrategy, I can get $1,800 40 days out. So, but then the other thing is too, there's only an 80% chance, that this will stay in the money, which, well, I guess I should only say there's about a 20% chance it'll go in the money. So really, I should be able to, even if my cost basis was 300, I should be able to sell this 275 strike 4 out of 5 times before they get called away. And every time I do that, I'm chipping down my cost basis, maybe even to below the strikes that I'm selling at. So unless you just pick an absolute dog and the price goes down, 50% on you, I don't really find that I end up bag holding very often. And in general, I just don't bag hold. I'll just sell under my cost basis, and if I lose money, I lose money. Like, if I didn't want to lose money, I shouldn't have bought the stock before it went down. So that's the way I think about that. All right, 2 minutes. Last minute question. 2 minutes. Ask me anything. Let's see. What else can I talk about? So, here's the danger. Maybe I started out with the danger, but let's just filter. So I started trading on Robinhood. I think it was right after the market went to hell. So in May of 2020 is when I really started getting busy. And I think I had about 70 grand in this account. And I've taken all of that out here now. But basically in about a year and a half, I turned the 70 into about 210, 240-ish. So I tripled the account in like a year and a half. And this whole time I'm like, holy shit, is options really just that easy? But everybody was printing money here. And when my account went to hell after they started raising rates, I had actually switched from the wheel to doing poor man's covered calls. And so earlier when I was describing the amount of leverage that you can buy for, half the price of the shares, seems great when everybody's printing money. But when the Fed raises rates and Tesla collapses from 400 a share to 100 a share, and the price of my leaps are collapsing by like 80 and 90%, in a year and a half, I gave, it took me a year and a half to, basically triple my account. And from November to January, it took me 2 months to lose it all back to the casino. I gave all the profits back in 2 months because of these leveraged calls that I was selling covered calls against instead of the shares. If I just had the shares, maybe I would have lost half the money, but I wouldn't have lost all of it. And so I dusted myself off here. I was like, okay, just, start over. Well, how does it go? The market can be, irrational longer than you can remain solvent. That is absolutely the case. So this is my cautionary tale. Poor man's covered calls, long calls can absolutely wreck an account. And I had way too much of my portfolio in poor man's covered calls because the market was telling me I can just print money doing that. And I learned out real quick that leverage is great when it's all number go up, but leverage when numbers going down is absolutely catastrophic. So this is probably something else that got me soured on owning long calls. Like, hey, I'd rather just own the shares and run the wheel. And so from February, I think I started trading on Tasty Trade at this point. I moved everything over to Tasty Trade. So I didn't do a whole lot with Robinhood. And then kind of recalibrated around here. And then earlier this year, of course, I started to do the 5K challenge. But yeah, I moved everything over to Tasty Trade just for the few added little bells and whistles they have here. But yeah, don't just think that this is easy peasy and the only thing that happens is that everybody makes money. All right, it's 8 o'clock, and I got to check my fantasy football lineup and make sure Deebo Samuel is not inactive. So, hey, thanks everybody who tuned in to watch and who did me a solid and filled up the chat and asked questions. You guys are freaking awesome. And hopefully I'll be able to do some more of this stuff and I won't knucklefuck the controls for the first 5 minutes of the next one. All right. Be good, y'all. I gotta figure out how to sign off this damn thing. I don't even know what browser I have it on. All right, here we go. Or I can just stream all night. You can watch me sleep. Later.